All right, let's jump right into this. Welcome to this explainer where we are going to definitively solve the massive headache of tax document mismatches, just to make sure your filing is absolutely flawless this year. If you're a taxpayer gearing up for the assessment year 2026-27, you absolutely must reconcile your income and your tax deducted at source, your TDS, across a couple of very important government documents. Now I know, if you've been feeling totally overwhelmed by this alphabet soup of tax compliance, take a breath. You are in the exact right place. We're going to break this whole thing down logically, step by step, so you can hit submit with absolute confidence.
So, the clock is ticking. We are rapidly approaching the absolute hard deadline of July 21st for your income tax return. And let me put this into perspective for you. With over 8 core returns typically filed in a single season, time is incredibly of the essence. A whopping 30 to 40% of all those returns are filed in the final 7 days. That is a massive bottleneck. You absolutely do not want to be caught in that last-minute rush, especially, and I can't stress this enough, especially when you have data discrepancies that you need to resolve. The earlier you spot these issues, the more runway you have to fix them before that critical 31st hits. Because here's the thing, so many taxpayers are facing the exact same panic right now. They're looking at their screens thinking, wait, my 26AS shows one number, but my AIS shows something completely different. Which one am I actually supposed to use? Guys, this is a massive hidden danger. Even if you did everything right, even if you calculated and paid your taxes perfectly, a simple, tiny mismatch between these government documents can instantly trigger a defective return notice under Section 139.9. Best case, it's a demand notice. Worst case, it completely freezes your refund. The tax department processes around 2 crore refunds annually, and I promise you, mismatches are the #1 leading cause of severe delays.
Okay, let's break down the main event, this showdown between your 2 core documents. Think of your traditional Form 26AS as your legacy tax passbook. It's the old reliable. It simply shows the TDS deducted by your employers, your banks, or maybe your tenants. But then in the other corner, you have the Annual Information Statement, or the AIS. This is the government's new, highly advanced financial intelligence document. It pulls data from everywhere: banks, mutual fund registrars, brokers, foreign exchange dealers, spanning over 40 different financial transaction categories. It literally sees everything from your monthly salary right down to that mutual fund redemption you did 6 months ago. Now, because the AIS contains so much raw transaction-level data, it can honestly be incredibly overwhelming to digest. It's just a wall of numbers. Thankfully, the tax department realized this and they gave us the TIS, the Taxpayer Information Summary. You can think of this as your aggregated hero document. It basically takes the massive data dump of the AIS, cleans it all up, and gives you neat category-level totals. When you are actually sitting down at your computer to file, this consolidated big picture view is exactly what you need to rely on to understand your taxable income for the entire year. So, a question I get all the time: why do these mismatches even happen in the first place? Well, the truth is, they are incredibly common, and a lot of the time, they aren't even your fault. There are a few usual suspects here. For example, your employer might have just filed their TDS return late. Or maybe your bank reported your savings interest to the government, but because the amount was below the threshold, they deducted 0 TDS. It happens all the time. We also see folks constantly forgetting about small dividend payouts, or they're completely unaware that their mutual fund redemptions were automatically pulled directly from registrars like CAMS or KFinTech and sent straight to the income tax department. All right, let's move right into our step-by-step solution. Phase 1 is purely about identifying the problem. First things first, you need to log into incometax.gov.in and download completely fresh copies of all 3 documents: your 26AS, your AIS, and your TIS. And please do not use old PDFs you saved to your desktop 3 months ago. That data updates constantly. Once you have the fresh files, you're going to systematically compare the income categories side by side to figure out exactly where the data gap is hiding. Honestly, the absolute best way to tackle this is by treating it like a giant puzzle and mapping out those categories like salary, bank interest, and dividends in a simple little table. Just put the 26AS number in column 1, the AIS number in column 2, and crucially, your actual personal records like your Form 16 or bank passbook in column 3. This visual mapping instantly reveals where those numbers start to drift apart. For instance, you might notice that a mutual fund redemption shows up loud and clear in your AIS, but it's completely blank in your 26AS. Doing this gives you a crystal clear roadmap to clarity. Once you've mapped out those gaps, it is time to take action. If you spot extra income or outright errors in your AIS, you do not just have to sit there and accept them. This is where we bring out the secret weapon:
The AIS Feedback mechanism. It literally allows you to digitally raise your hand and say, hey, wait a minute, this is wrong, and correct the government's record. And this is absolutely vital because if you correct it early enough, you can completely intercept and prevent an automated scrutiny notice from the centralized processing center. The portal actually gives you some very specific options to flag these rogue entries. You can proactively mark a transaction by stating, hey, the amount is incorrect. Or if someone else's PAN data somehow got mixed up with yours, which does happen, you can just select information does not relate to me. You can even flag duplicate entries. But listen, here is the big catch. The resolution for this feedback typically takes anywhere from 7 to 30 days. So you have to submit this feedback immediately if you want it resolved before the filing deadline. Time is definitely not on your side here. Now we enter phase 2, the actual filing of your return. Please pay close attention to this next rule because it's where a huge chunk of taxpayers make a critical, costly mistake. Always use your Form 26AS as the ultimate legal record for claiming your TDS credit. However, when you are declaring your actual income, you must rely on the comprehensive TIS or your own actual records if your records show a higher amount. Never use the 26AS to calculate your total income. It simply doesn't have the full picture. And hey, if you need to fix a deductor error, you'll need to reach out to them so they can issue a correction on the government's Traces portal, which is their official system for TDS corrections. Now, a super common scenario is discovering that your employer or deductor actually dropped the ball. Maybe they deducted the tax but forgot to deposit it, or they filed their return with typos. Your first instinct is probably going to be to just wait around for them to fix it. Do not do this. Not if it risks you missing that July 31st deadline. Go ahead and file your return before the deadline using the correct figures according to your authentic salary slips and your Form 16. You can add a note, and if a notice comes knocking later, you simply respond with your documented proof. Remember, the error is considered a deductor default, not yours. You are in the clear as long as you have the proof. As we synthesize all of this, I want you to mentally check off these critical, easily avoidable mistakes. Whatever you do, do not try to hide income that appears in your AIS, hoping the tax department just won't notice. They absolutely will. The scrutiny process is completely driven by artificial intelligence now. It misses nothing. Also, don't assume your old passbook, the 26AS, gives you the complete picture. And perhaps most importantly, do not ignore a tiny mismatch. The AI does not care if it's 50 rupees from a forgotten dividend or 50,000 rupees. It only cares that your math doesn't align with theirs. A mismatch is a mismatch. To wrap up this explainer, I really want to leave you with a pivotal thought. The tools you need to perfectly align your tax documents and avoid a massive headache are sitting right there on the portal, completely within your control. So what's it going to be? Will you let a forgotten 500 rupee entry trigger a stressful, time-consuming tax notice? Or will you log in, download your fresh AIS today, and secure your financial peace of mind? The choice is entirely yours. Take control of your data, use that feedback tool, and go file with absolute confidence.